Good evening, this is Nick Inman from VolumeProfileTrader.com on Monday, December 12th. And look, the market is definitely, jumping back and forth. Last Thursday we got a sell-off, and Friday we basically made up all of that sell-off back to the upside, and this morning we gapped lower and traded lower throughout the trading day, basically closing at the same levels we closed at Thursday. So, right now this market remains in a balance range, but it is shifting lower, and it's become more negative in a sense just because, today's was a down day, and we did break some resistance. We did make a newer low relative to Thursday, and I guess you could say, short term, yes, we're in a downtrend. We've made consecutive lower lows and lower highs now, and the right thing to do for now is to sell into strength. However, and this is a big however, we see, right here using volume profile, we see the support, or what should be support, just like we got back a couple weeks ago at the beginning of December or the end of November, whatever it was. This 1200 1180 level, if the market comes down to these levels, it should be interesting to see, if the buyers will be there. However, and once again, this is another big however, you can see the 50-day moving average pointing up, 200 still sloping down, and price is smack dab in the middle. So, we rallied into the 200-day, and, which has been some volume resistance as well, and we're failing against that. And the 50-day moving average, I'm sure a lot of people are looking for that to hold, and if it doesn't, then, we presume or assume that 1200 to 1180 is our downside target. Now, if I bring in a 60 or a 1 hour chart, a 60-minute chart of the S&P, you can see, let me zoom out to get the whole picture, really, call it since the end of, or the middle of October, we've really just been in a balance range. And, sure, we've overshot to the upside, we've overshot to the downside, but overall it's been 1180 to 1270 or so, and that's our range. And right now we're we're in the middle of the range, and we talked about taking profits back around 1250 to 1260 on the S&P. How it made sense to scale out. So you should have already have rung the register on this move here, and if you haven't, well, look what you're holding. You're holding, a move to the downside, and you're holding longs. So there's a lot to potentially like about the market from a buyer's standpoint, but there's a lot to still wait and see. We're just not at that buying opportunity that, we want to see in the market. Could that change tomorrow? Possibly, but really, it would only change for me if we got some kind of move or flush down followed by buying, and we're not getting that right now. So the moves to the downside, it's definitely, stay cautious, and if you're long this market, realize and learn from what's happened. We had our topping pattern, and now we're getting a move lower. If I zoom in once more to, let's see if I can pull up the right chart. Nope. Okay, I'm pulling in a weekly composites of volume profile on a still a decent time frame, just 1 hour, but each one of these is 1 week composites, and you can see the range relative last week was small, and we had a move to the downside on Thursday, recovered it on Friday. So really the range last week was about, really 20 points, nothing. And you can see this morning overnight we traded up to Well, I guess Friday closed at the point of control for the week. Sunday last night opened at the top of the range and sold off the entire day. So you can see this point of control. It was in fact resistance, held resistance, and unless if you were up last night or sold into the strength Friday, you woke up this morning and found yourself either selling into this or basically, hoping that the market would bottom. And from this picture, it looks like the bottom of this range is just like we saw on the other chart, around 1200 to 1180, and you can see there's no high volume from the current levels down to those levels in the most recent weeks. So it appears that this market's going to test that 1200 area, close some gaps, and that's not necessarily a bad thing, but what's more important is this the top of a big move down, or basically the comings to a very nice buying opportunity? I'd like to think it's the latter. I still think it's the latter, but any bad news, any macro news that is market negative trumps the potential for a market rally. But I'm still a believer that there's going to be some type of intervention that the market's going to like to move this thing higher. And I think it makes sense to be a buyer on this weakness. Now, with that said, I don't think it makes sense to be a holder when the market breaks down, gives us a test, and the next day fails and makes a lower low. Even if the market goes straight back up to 1260, it's showing us that the market's, it's weak the past couple of days, and Friday was basically a day of short covering and a day that sellers, or I should say holders of stock, should have been selling into. Since everything's so short term in the market, I'm going to keep these time frames relatively small and basically just look for right here, right now opportunities, starting with Apple. And is this a name that you want to be buying? Actually, okay, fine. Is this a name that you would be buying right here, right now? And my answer is, well, it's no for right now. However, it's outperforming the market, and you can see, like the market was not too long ago, bouncing sideways. It looks like Apple is in the process of doing that now. However, these lows and these highs are coming to an apex much quicker. That may just mean that the bouncing range widens to 396 on the upside or 386 on the downside. But needless to say, Apple's holding up relatively well. And if I look at it on this chart, you can see it, similar picture. Not much has changed. It's just holding up, the November point of control still resistance. And as far as support, you can see this huge volume here, holding it for now. So we would like to see Apple continue higher. We'd like the rest of the market to continue higher, but right now, Apple's in a balance range. Amazon, now this is the name that, for a bounce, I think it could work, and short-term stuff, but I see this potential, I guess you could call it a bullish wedge pattern or something, but we're holding the value area support. We're holding, these recent lows for now. Still down 2% for the day, but it's just a name that I think you can look out for, because it's already had a major move down, and Amazon's, in my opinion, despite its PE ratio, I still think it's a company that's fairly valued. I think they're going to meet all their estimates fundamentally, and I think we have a trade back up to 396 or so if we get a bounce in the market. So that's something to look out for. If you're short Amazon, you should be looking at the same picture but looking to cover sooner rather than later. Okay, here's a name, Lululemon, that I haven't covered often, Actually, I don't think I've ever covered it. I covered it for the first time in the trading room. And what I'm looking at here is we're sitting at, potentially a massive top on this name, or a potential very nice buying opportunity. And since it's at the bottom of the range, it's a low risk, perhaps a high probability trade that will get a move up in Lulu. Now, as far as how much, my first target's $50, so it's not like it's a huge move to the upside. But if I zoom back in, you can see what's going on here. And right now we're balancing. Well, let's start back in November. In November, it closed the month. Well, the month closed with the point of control at the bottom of the range, and you can see, even going into the end of the month, it gave you a bounce to the upside, and then earnings came out, and got the market, or Lulu got crushed, traded up back to the top of this range, and now we've been balancing since, and now we're holding December's point of control and November's point of control, and it closed basically flat on the day. And we covered this in the trading room, and we got long this around 47.40 or so, maybe a little lower than that, and now it's off to the races. And the best part is you can place your stop right around 46 or 46.50 and play for a trade up to $50. And if we get it and this thing continues, then it's $53, $54. So there's potential a nice trade in this, and it's worth holding on to, in my opinion. Checkpoint Software. This is another name, and the only thing that's wrong with this chart right here, right now, is the December point of control is at the top of the range. If this shifted to the bottom, it would make me feel a lot better. However, at the end of the day, we got a nice bounce off this value, our point of control support, $53. So if it holds this 52.75 level, I think this is a name you want to be involved in also, and play for a trade up, back up towards the high 50s, low 60s. Celgene, this name it's given us a nice bounce off the point of control support. You can see the huge high volume at this 61 to, call it 58.75 level. Those were the lows, bounced. Now we're holding the top of that range, and we're continuing higher. Today outperformed the market up just a little bit. And is there some potential resistance? Probably, just because how the rest of the market is acting. And if I zoom in a little bit, you can see we have point of control that's up at the $64 level, November's point of control. So if you bought around 61.50, then you're in the money, and your stop should be at minimum break even. But we're seeing these whole moving averages start to turn up, which is positive. The only problem is we're facing resistance. So this thing short term, we're still making lower lows and lower highs, but within an uptrend, this is just a balancing phase that we're looking to move higher from. So I think that you can be involved in this name, hopefully at lower levels, hopefully more towards December's point of control. But you can see these whole moving averages are pointing up, so it's positive. One other thing I want to cover is oil. And oil, one thing that's been significant is this point of control. This, during the uptrend, if you go back and watch any of the videos, talk about $100, $98, that's our price target. And sure enough, that's literally it's basically been the balance range for oil, and we're continuing to see balance. But if this thing starts to break lower, well, I guess break lower from these recent lows around $95, then oil could drop back down to 90, 85. But just keep an eye on it. This 50-day moving average, it's catching up to it, and you never know. Any type of macro news could rock oil, and by Rock Oil, I mean, it could take it up to 115 or it could take it down to 85. So it's just something to keep your eye on. Unfortunately, there's not a lot going on in the market right now, and it's just a sit and wait approach until we get more opportunity per se. And it's important to manage your risk, and be aware that it's okay to be involved in the market, but it's not okay to hold stocks that are going down and you hold a lot of shares. That doesn't make a lot of sense. So I continue to believe it makes sense, or give this market opportunity. Don't if you want to be a seller, your stop would be above the most recent highs. You could even put it at the point of control level a little above there from last week. But I think you give this market a chance to test 1200 and see where the buyers are and see how many are there. And we'll get a sign and we'll get an opportunity to trade one way or the other. I think this December trade so far, which has been really to the downside, I think it's going to be short-lived, but it's time will tell. And stick with the trend. And in my opinion, the trend right now is this higher high and higher low that we've seen. The only problem is we've seen a lower high since. So connect the lines, and sure, you have some type of pattern going on here. But anyways, I hope this helps, and I'll see you in the trading room tomorrow.